Hello students, hope you are doing well and you are most welcome to my channel Utsav Tutorials. Yesterday we had studied about the rules of debit and credit through modern approach. Today we are going to learn about journal and journal entries. Before we proceed further, let us recapitalize what are the rules of debit and credit. As we know, there are two approaches to rules of debit and credit. One is traditional approach and other is modern approach. You can follow any of the approaches and you will get the same result. In traditional approach, the accounts are classified in three parts. First is personal account, in which persons are involved, whether natural or artificial or representative accounts. Okay. And second is real account, in which we deal with the assets. And third is nominal account, in which the losses and gains are taken into consideration. And as we progress, we will revise the rules for the same. And as per the modern approach, the accounts can be classified in five parts. First is capital, in which capital is the amount that is invested by the owners of the business. Second is assets, as you know, the properties, things owned by the business. Third is expenses. Fourth is revenue, and fifth is liabilities. And both the approaches will give the same result. Okay, with more and more practice we can learn better. Okay, so let's begin with journal. Now the question is, what is journal? Journal is a book of prime record. That means whenever any business transaction take place, it is first recorded in the journal. That's why it is also known as book of prime entry. Clear? So in journal we record the entries in a chronological manner, that is day wise, on the basis of dates. So whatever transaction has taken place today, it will be recorded in the today's date, and whatever transaction that take place tomorrow, it will be recorded tomorrow. Okay, so this is the way of passing the journal entries, recording in journal. And whenever the entries are recorded in the books called journal, it is known as journalizing, or simply we can say passing of journal entries. Clear? So we will take up entries, and before that let me draw the format of journal. Clear? First is date, after that particulars, after that ledger folio, debit amount, credit amount, Now we will discuss about these five parts. First is date. As you know, date means here we have to write the date of transaction, business transaction. Clear? In particulars, we pass the entry, that is what is to be debited and what is to be credited. We write here, like this account has to be debited, and whenever the account which is credited, before that we write 2. Okay, and here we write narration. Narration means why this entry is being passed, that is the transaction is written in a summarized manner, most possible summarized manner. Okay, ledger folio. Ledger folio is the page number of the where this account stands. Ledger is a book in which all the accounts are transferred account wise and date wise in a chronological manner, and you have to write the page number where this entry has been transferred or posted. Clear? Here we write the amount of transaction that is being debited, and here we write the amount of transaction that is being credited. Okay. So initially I will do questions as per this format. After that, without format I am going to do. Okay. So let's start with the first. Obviously, whenever business is started, the first entry will be of introduction of capital. That is, for example, business is started with cash 50,000. Okay. Business started with cash 50,000 on 1st of March 2022. So when business is started, two accounts are involved. We can see on the basis of earlier periods. One is cash and other is capital. Because cash is coming in business. Business is getting cash. Why business is getting cash? On account of capital being introduced by the Kapil. Say for example, Kapil is your proprietor. Okay. So the entry will be, first of all we have to write the debit part. Cash is asset and the rule for asset is what comes in is debited. So here we are going to write cash account, debit. And what is to be credited? To capital. Capital is your personal account because it is being introduced by the proprietor. So credit the giver as per the traditional approach. To Kapil's capital. And amount was 50,000 in debit column and 50,000 will be written in credit column. Okay. Now we have to write narration. It always starts with either being or for. Being capital introduced by Kapil. Okay. Now in theoretical part we are not concerned with the ledger. In practical life we have to write it. But in class 11 or in BBA or BCom part 1, we are not supposed to write anything in it. It will remain blank. So this is how the entry is done. And after that, we have to put a line. And suppose next entry is on the same date, deposited into bank 10,000. This business opens a current account with the bank and deposited 10,000. So on the same date we will write deposited into bank. The cash will reduce, what goes out, and we are going to get our bank account opened. So bank is an institution. So bank is receiving money from our business. So debit as per the rule of capital account, debit the receiver. So bank account will be debited. To what goes out? Cash is going out. 10,000. Now here we will write the narration being account opened with cash 10,000. Okay. This is how we have to proceed. Now I shall be taking up more examples, more transactions so that you can understand in a better way. Clear? Now I am taking up illustration from T.S. Grewal of chapter 8.8 and it is illustration number 3. This is I am going to solve it for you. Clear? We have to pass the journal entries of the following transaction. The date is April 1 of year 2020. First entry is Nitin started business with cash 1 lakh. Nitin started business with cash 1 lakh. So it is 2020. April 1. First of all, we will write the date. And started business with cash 1 lakh. So, we can identify that two accounts involved are cash and capital. Clear? And cash is your asset. The rule for asset is, or real account is, what comes in is debited. So, we are going to write cash account debit. Okay? To capital, or you can write Nitin's capital. Nitin's capital. Okay? Even if you write simply capital, whenever there is a proprietorship firm, you will get full marks. There won't be any mistake in it. And amount invested was 1 lakh. So we will write in corresponding debit column and credit column. Just to remind you, first column is date, second is particulars, third will be ledger folio, fourth is debit amount, and fifth is credit amount. Okay, this is how we have to proceed. You have to do it in a proper manner. But here my intention is to make you understand. So format is secondary for me but not for you. Okay. So we move on to April 2. For purchased office furniture in cash 5,000. April 2. April 2. Purchased furniture for cash. So your business is getting furniture by paying cash. So cash and furniture, two accounts involved, and both these accounts are real accounts. The rule will, what comes in is debited. So you are getting furniture. Furniture account DR to cash 5,000. Okay. Here you have to write narration. Being furniture purchased. Here being capital introduced. Okay. Now we move on to April 3rd. Purchased goods in cash 20,000. Purchased goods in cash 20,000. Before I write narration for this or entry for this, let me tell you goods. Whenever the word goods are purchased, the word goods is there in the transaction, we have to use either purchase or sales. If we are purchasing, then we will write the word purchases, and we are selling the goods, we will use the term sales. The reason is, goods in accounting means it is the item in which the business deals. That is, the goods are the items which are purchased to manufacture something or to resell for a profit. Clear? So, whenever goods are purchased, either for manufacturing purpose or for selling purpose, it will be taken as purchases. Clear? So, you have purchased goods. So, we will write what comes in is debited. Sorry, purchases is your expenditure because you are spending something. Okay? So, purchases account debit to cash because it is a cash purchase for 20,000. Narration: being goods purchased for cash. Let us revise. Purchases account will be debited because we are purchasing goods for resale. in order to make profit out of that. So purchases word will be used. It's a nominal account. Debit all your expenses and losses. And cash is going out. You are paying cash. What goes out of the business is credited for real account. Cash is our real account. So the amount involved is 20,000. 20,000, 20,000. Okay. Purchase goods from Hari and Company. It is on April 4. Here we have to see that goods are being purchased from Hari and Company and there is no mention of cash. In such cases, it is assumed that the goods are being purchased on credit. That is, it is a credit transaction. Clear? So, two accounts involved are purchases because you are purchasing goods. So, purchase will be debited. The reason being a nominal account. Okay? Debit all your expenses. And other person involved, other account involved is personal account, that is Hari and Company. Credit the giver because we are purchasing goods on credit. So he is a giver. That company is a giver. So the entry will be purchases account DR to Hari and Company. It is for 1 lakh. Okay. Amount will be written in corresponding debit column and amount will be written in corresponding credit column, credit item. Okay. Being goods on credit purchased from Hari and Company. We have to write the narration in the shortest possible manner. Clear? Okay. Once again, goods are purchased on credit from Hari and Company. Credit the giver, debit all your expenses because it's an expense. Goods purchased is your expense and expense is your nominal, comes under nominal account, and the rule is debit all your expenses and losses. Okay. So we move on to next. Now entry number 5 is that takes place on April 5. April 5, 2020. And the entry is sold goods against cash 20,000. Sold goods against cash for 20,000. That means the goods have been sold for 20,000 and you have received cash. So two accounts involved are cash. Cash is your real account, and the rule for real account is what comes in is debited. So cash account will be debited. Okay. And why you have received cash? Because goods have been sold, and I just told you whenever goods are sold we use the term sales. So sales is your revenue because it will contain a part of profit also. Okay. So to sales. Why sales? Sales is your revenue and revenue comes under nominal account, and the rule for nominal account is credit all your incomes and gains. So it will be credited. Clear? And the amount is 20,000. Okay. Narration. Being goods sold for cash. Okay. Sold goods to Ramesh and Company, April 6. Sold goods to Ramesh and Company. Since sales has taken place, again the same rule will be applied. Credit all your incomes and revenues, gains. So sales will be credited, but since here you haven't received cash, So cash will not be in picture. So then which account is involved? Ramesh and Company, because you have sold goods to Ramesh and Company on credit. Okay, so Ramesh and Company is a artificial person. So the rule for personal account is debit the receiver. He is receiving your goods. So Ramesh and Company account DR to sales, and amount is 75,000. Okay, narration: being sold goods to Ramesh and Company on credit. Okay, clear? Again, Ramesh and Company is your debtor because he is getting goods from you on credit. So debit the receiver for personal account, and other account is your revenue, that is sales. And the rule for nominal account is credit all your incomes and gains. Hence sales account is being credited. Clear? Now next transaction took place on April 7. Paid salary to staff in cash 15,000. Now whenever you pay cash is your real account, and what goes out, it is reducing what goes out. So cash account will be credited. But why you are paying cash? You are paying salary to your staff, the staff that has worked for you. You have to pay. So salary account. Why salary? Salary account DR. Salary is your expense and debit all your expenses as per nominal account. Salary is your nominal account. It's an expense. Okay, and since you are paying in cash, so cash is real account, and the rule for real account is what goes out. It is 15,000. Narration: being salaries paid in cash. Okay, for narration you don't have to worry. You have to take out from the transaction itself what narration has to be written over here. Okay, and April 8, paid electricity bill. Paid electricity bill. Since electricity has been consumed in office, and for that the bill has come out for rupees 2,000. You have to pay 2,000 for electricity bill. It is an expense because you have to pay for it. So for the rule for expenses, debit all your expenses. So electricity charges or electricity account DR to cash, because you are paying in cash. Cash is going out. What goes out? It is your real account for 2,000. For or being electricity bill paid. Okay, on 8 April you have paid electricity bill. So electricity charges is your expense, and the rule for expense is debit all your expenses and losses. Hence electricity charges account or electricity account will be debited, and the credit will be given to cash because cash is going out. What goes out of the business? For real account. Cash is your asset. Okay, now we move on to April 9. April 9. Paid telephone bill. Paid telephone bill. This time you are paying telephone bill. Telephone bill is again your expense. Expenses are debited as per nominal account. So telephone expenses account debited to cash because it is being paid in cash and the bill is 500 for or being telephone expenses paid. Okay, so paying telephone expenses is your expense as per the nominal account, and the rule is debit all your expenses. We have to specify what kind of expense it is. It is telephone expense, so it will be debited. Okay, and cash because cash is going out. And the last entry for this illustration is on April 10. Purchase stationery in cash 250. Now you are purchasing stationery for business. So stationery is your expense. Expenses are debited as per nominal account to cash because you are purchasing stationery in cash. Cash is going out for 250. For being stationery purchased. Okay, stationery, you have purchased stationery for cash and stationery is your expense. Expenses are debited as per nominal account to cash because cash is going out. What goes out is credited. Okay, this is how we have to proceed. We have to do the solution to transactions. Clear? And I hope things are better now. You have to do practice. The more and more you do practice, the more and more you learn, the more you become perfect in entries, passing entries, in generalizing the transactions. Okay, and revisit this video in order to have a better understanding. Okay, I hope now you must be feeling somewhat relaxed. We will take up some more transactions in the next video. This is all for today, or for this session. Sorry, we are in the second half. We are going to have another video. Okay, till then, relax, revise and enjoy. Okay, take care.